All right, man.
Yep.
Let's get straight into it, man. Let's get straight into it.
Good.
There's a few highly controversial, interesting topics that we're gonna have to cover this week.
Yeah.
Another fascinating week in tech.
Every week it's like every week there's just something happening.
100%, man.
Back to back.
100%. Look, for me, the obvious thing we have to start with is OpenAI, man. For anyone who doesn't know, the headline for OpenAI is there was some, potentially dubious sources, unconfirmed reports, but believed leaked reports that OpenAI missed its revenue and user targets at the back end of last year for 2025, December 2025.
Yeah.
So for those who don't know, they had a user target, weekly active users of 1 billion weekly active users, and supposedly, allegedly, they missed that target, and they came in at a measly 900 million, so about 10% off. And where that starts to become interesting is obviously the big Sam Altman was going around on a lot of kind of public appearances, podcasts, really laying out quite transparently his views on how much they're going to have to spend on compute to do what they want to do with the product and serve customers in the way that they want to serve customers. So the question that naturally follows is, if they are not meeting their own projection on the trajectory of revenue and customers, what does that actually mean for the financial viability of the business with those kind of spending commitments?
Yeah. For me, I really think it's not a good sign, especially because currently they have obviously a massive burn rate, and they're trying to get investors, and they're making these promises like these are the targets we're going to meet. And I think more importantly there is that if you don't meet the targets now, like this spread they're having is from now on their growth is just going to get keep getting slower. So if right now they've not met those targets, they're unlikely to be able to move at the rate they've been moving at before. They're just going to have slower targets going forward. Now they have competition from obviously Anthropic. The market is getting really hard.
Oh wait, we're gonna get to
The market is getting harder and harder for them to capture. Like everyone else is waking up, everyone else is starting to push into the market. So if he said these are the targets they have, this is how they're gonna be able to meet these spending commitments and all of this, and it's not happening. Like I don't really see it happening going forward.
Listen, I think there's a couple of things within what you said. I think firstly, quantifying the scale of the miss is interesting. So again, we're talking about a scale of 1 billion weekly active users. They got to 900 million. So they're about 10% off. Is that catastrophic for me? No, it's not. But I think you said something there, which again, it kind of comes back to what we talked about last time, which is a narrative that is prevailing that once the growth curve slows, that they're in big trouble. I keep coming back to where, if we zoom out in the entire adoption of AI and the phases of the AI wave that we're about to go on, which era or which phase do we think we're actually in? For me, this is a 15, 20-year cycle, and we're in maybe year 4. We're in year 3 or 4. And so what, for me, when I kind of calculate what that actually means going forward is we're in the early use cases of what you can do. Most of the users are still just using the chatbot, a GPT. We're really trying to figure out what we can do on the enterprise side, getting into the APIs, getting into long-running agents that will be able to do a lot more than what we can do today. So again, when people think about the curve, I think when you get to a big enough number, the law of big numbers, you get to a big base, you get to that critical mass, eventually people just stop believing that you could keep going at an insane clip. And we're going to come to Anthropic, who I think is a perfect example, and NVIDIA to an extent, a perfect example of how you can be on an enormous base and still have a exceptional growth rate. So I'm going to challenge the notion that because they have not met the growth rate that they expected in the most recent reporting period, does that actually mean that the growth curve is perpetually going to slow down or perpetually going to reduce? I don't think it does. And I think we're going to see, as the use cases expand and evolve, I actually think the growth curve is going to accelerate even off this enormous base. That's my challenge.
I mean, I hear you, but the problem I see there is I feel like the targets they have with the number of customers they want to reach, even while they're trying to meet these numbers, they are having to subsidize these customers. Like they're having to subsidize customers. And I feel like that can only go on for so long. Like I feel like if they don't quickly and very quickly hit these numbers and make it look like, oh, we've hit these ridiculous numbers, we've done all of this, straight to IPO, and then they can start getting all of that. If they don't quickly hit that, and then it starts getting obvious, it starts getting more obvious to the public that, okay, even these numbers you're saying you want to hit though, like the numbers you're having, you're still having to spend more, like each customer, you're having to subsidize each customer. Like this is not looking like it's going to be profitable. So I feel like when they speedrun everything and they say, oh shit, we've hit 1 billion, we've done this, people don't really look at the how would I call it? The math and the basics to say,
Unit
okay, you know what? Yeah,
economics,
is this like profitable or not? But by the time you start to slow down, then people start to actually look more like, okay, you know what? This IPO is not looking like it's gonna happen now. Okay, but what's actually going on? Like, okay, how much are you guys actually spending? And they're like, oh, we actually need more money. And then by the time that starts to happen, it starts to get more obvious that this is not really profitable on a unit scale. And even if we say, okay, fine, we're in the initial cycle and all of that, and AI adoption is going to go up more and all of that, it still doesn't really change that. I feel like it's going to take a lot more time for it to become cheap enough that you can just let everyone do whatever they want to do with AI without you having to need more people pumping in money, more investors pumping in money like that. I feel like right now it's more the businesses who are actually being able to pay the amount that they need. That's just the part that I feel skeptical about.
Again, I think there's a couple of things again within that though, because effectively you're asking what is the gross margin on the unit economics, or what is the profitability per customer, and what's interesting is for both of them. So we keep talking about OpenAI and Anthropic.
We can't really talk about one without
you can't, right? It's just like two twin brothers who don't get along. Yeah, it's funny that they're co-founded by the same guy as well. He was an OpenAI guy as well, which is curious. What we're getting into is what is the unit economics per customer? What is the net profitability per customer? And they're both, to be fair, they're both being quite opaque around what the net margin is, what the gross margin is. What I can imagine from using the products and the way that their commercial models have shifted over time is they are happy to invest on the consumer side for the mind share. So that means you might be making a loss even on a gross basis on customers for the mind share, for building the brand, for doing the Super Bowl, for becoming the known player in this generational wave.
The hype you need for your IPO.
Yeah, and then they drive the margin from the enterprise customers who, as we are seeing, are also forming a bigger mix and contribution to the total revenue as well. So as that shift towards enterprise continues, my expectation is that the gross and net margins will continue to increase. And of course, the interesting thing as an outside viewer is we don't know how close we are to the curve of them hitting that net profitability factor. I think the biggest litmus test of how close they actually are to that net profitability is going to come when it comes to IPO. So when Sam's out there and he's telling investors these stories and he's telling everyone that robots is coming soon and AI and OpenAI is going to be the LLM layer within that physical AI, all these expanding, multiplying use cases continue, and OpenAI is going to be the brain behind those use cases. That's where you can see a multiplier on the number of users and a multiplier on the revenue. And I think where they're getting grounded into reality, where they want to IPO, is investors are going to say, cool, what is the burn rate per month? What is the net profitability per customer? What is the NRR, both for customers and for businesses? And I think that's where you're starting to see a little bit of that tension between the CEO and the CFO.
Yeah, that's an interesting one. I read about the apparent issues they've had within them and disagreements on exactly the timelines, the timelines around when they can IPO and how feasible it is.
I mean, it sounds to me like Sam's just saying, "Yeah, man, like we got this coming.
We're
It's
already
coming.
right
We're
now."
growing quick. It's coming. Let's just go public." You know?
Yeah.
And I think obviously the CFO is looking at it like, "Listen, I could go jail for this if we don't tell this story in the right way, or the numbers are inflated, or they're not even if that's necessarily intentionally in a malicious way, but if the numbers are not representative of where we are, I am going to be in big trouble. My reputation's in trouble. Legally, I'm in trouble."
Yeah.
So I think she's kind of looking at that with a little bit of valid hesitation, and that's probably causing a little bit of rift. It can be a typical thing in a fast-growing company between a CEO and CFO.
Yeah, it's a very hard like how exactly I can imagine Sam's worries as well, because he's thinking we need to IPO ASAP, so we like we're burning a lot. We've been asking for a lot of money. We need to IPO ASAP, just to get this over the line. And also, I think there's also the risk that I've seen some people suggest that if Anthropic IPOs before them, it probably takes away some of the investor capital that would have otherwise gone into them. It also kind of determines the multiple they like that is expected for that kind of company.
Yeah,
and they're kind of under their shadow.
Yeah, you know what? You actually get into something. You actually get into something quite interesting there. You said that the expectations are starting to mount. Effectively, there's a race between them and Anthropic. I was actually reading about this before, and it reminded me of this book. These corporate finance McKinsey guys, four cornerstones of value. It's just one of these corporate books, but it did have something that was interesting and that stuck with me over the years, and it's the concept of the expectations treadmill. So have you heard of it? Have you heard of that?
Yeah. I think I heard about that before. Like, when you at some point you get to a point where you would eventually not hit the expectation, something like that.
Effectively, yeah, and I guess even to deconstruct it to the next level of detail as well. That the idea is that for these fast-growing businesses, and even these, whatever the field is, but we'll start with business. For these fast-growing companies that are really growing at an astronomical clip, the first tenet of the idea is that in order to become a generational company or to become wildly successful, there will come a point where you have a breakout moment. For some people, that's very early, and they just break out immediately, and then they go astronomically clear. For some, it builds over time, but there is a point at which they go exponential, and then they go vertical, and then they just really do. Exactly, there's an inflection point, and that's when they really, really do, explode. And what the expectation treadmill does is it starts to really unpack what happens after that. So, and I think OpenAI is actually a perfect example where you've gone from 0 to 900 million users in 2 or 3 years, and so however you want to look at it, that growth curve is astronomical. And what other people start to do, and this book frames it from the lens of an investor. What other people start to do is they start to impose expectations on you. So even with public businesses, you see you have analyst estimates, right? They're estimating what's the price target, what are they thinking that you will achieve, and it does apply to private companies as well. And so what they're looking at with OpenAI is they're basically saying, all right, they got to 900 million in a couple of years. How quick to get to 1 billion? How quick to get to 2 billion? And what the theory effectively does is it says, no matter how successful, no matter how fast growing, no matter how quality the venture is, there will come a point where the expectations exceed what the actuals are going to do and what they actually do. And what it then does is it kind of dissects what happens at the point when you hit the end of that expectations treadmill and you're now scrambling and you're now going to fall off. And I think what that usually inevitably leads to is a correction of some kind. Either you have a down round on the valuation, or some investors want to pull out. Effectively, it does mean that the value and the price is going to reduce because you finally met the point at which there's now a question as to whether your actuals will meet the expectations. I think that OpenAI has, it may be a victim of their own success to an extent, but I think they have reached that point where they are at that expectations treadmill now. And because they wanted to hit 1 billion and they only hit 900 million, I think they're going to run into some short-term headwinds. Maybe it delays the IPO, you know, maybe it stops them being able to attract some of the top talent that they want to attract for a very, very short period of time. But what I am sure of is that it's definitely not the end, and I don't see it capitulating and crashing in the near term. I think the question as to whether they do eventually run out of cash is 100% valid. But right now, I see it as a short-term kind of headwind of meeting that expectation treadmill. And my instinct is that in the short term, they're going to come through it pretty unscathed.
Yeah. It's an interesting one to see how it goes. And I think I think something else is that even, for example, regarding if they eventually like run out of cash, I feel I mean, I've heard people say that, but I really genuinely wonder if they are too big to actually fail. Like that's something I actually wonder sometimes. Like all the people who have invested in them, and like I wonder if even if things weren't going good, if like they would be allowed to fail.
Well, you know, big DJT, Donald Trump, he said repeatedly, like, this ain't 08. or sorry, this will be 08, actually. Like, we're not doing any bailouts. And I think, what's the guy, David Sachs, who's kind of one of his generals there, prior founder as well, SaaS founder, legendary SaaS founder, said a similar thing. We're not going to be doing bailouts here. So it's ultimately, this is capitalism. Man. This is what you wanted. So if you fail, you're not a failure. And I think that's the right way to look at it. Because otherwise, as with any market, you're just going to get irrational exuberance and bad decisions. And I think, when I think about it, I look at it and go, you know, there's a chance they run out of cash. When I look at the IPO, I think that, to me, it looks like, as you were kind of touching on and alluding to earlier as well, it looks like an opportunity to get some liquidity to the later stage investors. Because I'll tell you right now, the early stage investors in OpenAI, they are laughing, man. They've had their rounds, they've had their liquidity, they're cooling. But the later stage investors, they're probably looking at it and going, we might be approaching the limit of what we can do privately valuation-wise, right? There might come a point where you start to get to 1 trillion, 1.5, 2 trillion, where really, for a major liquidity event, they might have to go public. And so I think I'd agree. I think there is probably a little bit of pressure there to try and make that sooner rather than later.
Yeah, interesting one.